All right. Good morning, everybody. So we're going to get BLM revisions first. Tomorrow we've got inflation data. Depending on what we get this morning, we may see the market already start moving. It might not wait for the inflation data. The idea is the jobs dual mandate between the Fed's idea of jobs and interest rates, inflation. Today we're going to be looking at jobs data. Tomorrow we're going to get inflation data. Depending on what the jobs data is today, inflation data tomorrow may not be worth waiting on. There's been some talk of a 50 basis point rate cut if the job numbers today are really bad. I think that's some pie in the sky rainbow thinking, but whatever. It comes down to market expectations at this point. The number is only going to matter based on those expectations. So we can see on the upside, the market's kind of stagnant. Everything that's green, the S&P, the Dow, the NASDAQ, they're just barely in the green, not up by much. And to the downside, other than Germany, Japan's starting to get a little stretched out. But we're just really kind of hanging out near the line. Hong Kong and the S&P's small cap, they're just right on the line, just waiting. This is the one that we're focused on at 10 a.m. Non-farm payrolls benchmark revision. So really big deal. It's been on the radar all year, but as with everything else with the market, they tend to not pay any attention to it until the last minute. And then tomorrow we'll get into whether or not the other side of that coin is going to matter. But once we're through the benchmark revision, we really don't have much for the rest of the day, unless the White House is going to come out with something, and it doesn't look like it. We have the Apple event today, but there's still no anticipated change to, their benchmark product. So I don't know, the last 7 years, they just really haven't done much with those Apple events. We watch it every year in my house, but didn't they give up? They closed their self-driving car team, scrapped it and dumped billions of dollars of research, right? I was pretty sure that Apple scrapped its. Oh yeah, 2 years ago now, maybe a year and a half ago, they ate that loss and moved on and said they'll take it back up later. But I might be getting that confused with the self-driving car with the Apple car. Those are two different things, right? So maybe they scrapped their Apple car, but they still kept their self-driving team. But I was pretty sure they scrapped the whole bundle, the self-driving and the Apple car and all of it. And that was a wash of a couple $1 billion. What's a couple billion among friends, huh? What do you need it for? You're all right. I don't think any of us needs another $1 billion. So quiet into the 10 a.m. time frame. Then we get a little data and we'll see what comes next. There's a lot of bricks in the wall of worry right now, but we just keep trucking and we just keep holding up, right? So we still don't have big seismic events that are shaking loose the market's footing. And until that happens, we're going to hold the line and or grind higher, right? And then there's just There's nothing to do except participate or get out of the way. Let's stay here for a second. I built this indicator by hand a few years ago. And then yesterday, I got some help from AI to adjust it a little bit. What we're looking at here is just an event marker, right? I've got GDP over the last couple of years, non-farm payrolls, QRA, Jackson Hole events, new quarters, bond events. So these are not upcoming events. These are all in the past, and you can turn them on and off, which means that I can swap from SPY to Apple, Amazon, whatever I want to look at. It's an indicator, so it's going to apply it to whatever market I'm on. And it gives you a chance to look at what the market was doing into that event and then what happened on the day of that event. I've had this for a couple of years. It's tedious, time consuming work to go in and hunt down, what was the market, the non-farm payrolls date from, 2 years ago, and then write out the code, draw the line. And I had AI assisting me with it yesterday. It's not done because I've got a lot of packages to put in there. But I wanted to point it out because when it comes to Thinkorswim and TradingView, the AI is getting better and better at helping write the code. Even if you are not a Thinkorswim coder or, you don't use PineScript, it doesn't have to be a complicated process. Don't buy indicators, please. There's nothing they're going to sell you that you can't live without. And if you're thinking about buying an indicator, reach out to me or one of the other mods. Tell us what you're looking for or what you're thinking about buying so that we can try to write you a code so you don't have to do it or find you a free one. Some of these people are charging just gross prices for the craziest thing, like an indicator that marks yesterday high for $10. I mean, so what? It's $10, right? But it's yesterday's high. Don't buy that. It's very frustrating. See people, already struggling to trade and then losing money to these people that want to gouge you. If their indicators were so awesome, they wouldn't need to sell them to you to make money, right? They would just use their awesome indicators to trade and they would make money that way. Overnight volume 50,000. It's within the norm. It's kind of just treading water. Looking at the move that we got in the overnight, we really didn't get much. We got a narrow IB with a little poke out. A 2 a.m. move put us back inside the box, and we really just got a nice tight range, and we got nothing. The call wall didn't roll up, but the put wall did roll down a little bit lower. It's just back down to its previous level, right? This is the lowest roll down in that range that it's been moving in. From here, it's rolled up a couple of notches, and then it's rolled back down a couple of notches, but this is the lowest point. So if it rolls again lower than this, it'll be a new low in the put wall that we haven't seen in like a month. It's been a while. But the call wall is still holding at the same spot that it was. We are above all the major moving averages on the daily. And it's important to recognize that, right? They're not as steep as they were back here. The angle of the moving averages matters. And here they had a much steeper angle. Here they're more mellow and not pointed so aggressively higher, but we're still above them. They are still spread out like a fork. And this market is not broken, and it's not giving us any signals that it's done. I don't know. I think the housing guy might take them or let their assistants battle it out. Heads up if you live in Chicago, though. Goodness. You know, traffic's got to be a nightmare in that scenario. We are at 65.11 cog line. And since we're basically flat, we have no edge towards one side or the other. But it is worth noting, if we want to get to either one of our ADR lines today, we have to take an inside day breakout because yesterday was a really narrow range. Right? If we only focused on the RTH, this is an NR. It's a narrow range 1, narrow range 2, right? Your NR count. It's kind of old school and we don't really apply it to futures that much, but narrow range 7 is, oh man, it's like a classic. So it was really narrow if we only count that. As you can see, we're sitting inside of it now, but we're IX10 because we're sitting inside of this day. And that's the day that matters, right? At 90-point range right there. It's also worth noting that every time we've gotten up into this zone, we've sold out of it. And we don't know yet if we've taken out all of those orders that are up there. We saw a lot of trading activity on the 5-minute yesterday when we were looking at this with the volume profile. That 65.40 was heavily defended. But we got to get back up there and see if there's anything left. And it's very likely that there's still quite a bit left. If we're running OCR, then between the 5th yesterday and this morning, we've got the higher lows. But we got a lot of ambiguity on the top side. So we got nothing here, right? And we're stuck inside of the 5th range. So GTFO, we got to get out of the box. Even if we widen the box of yesterday to all of yesterday, we're still sitting inside of yesterday's range. So every morning we're trying to answer the question, what's today going to look like? Is it going to be sideways and choppy, range day with good turns on the edges, a breakout day that fails and we come back in, or a breakout day where we actually run and get some move somewhere? And it always starts with, well, where are we at? Because if we're already outside of yesterday's range, then we already have a breakout. We got to just try to define if we're going to keep it or not. But if we're still inside of yesterday's range, then it's really clear that we got to get outside of that before we can do anything else. We're inside of yesterday's range. We're retracing our own Globex range. Yesterday was sideways because we had this big BLM data today, and the market isn't going to front run, billions of dollars in front of an unknown or a known unknown. Can't blame them, right? And then tomorrow we've got big inflation data numbers, and they're not going to want to step in front of that one either. With the little asterisk or the little caveat that says, look, if today really comes off sideways, they might just, say screw tomorrow and run it anyway. We have to be prepared for that. So if they run it anyways, where are we going? And this isn't about being bearish. This is about getting out of this box and going somewhere. If we can break our own Globex high, 65.36 is the ADR, and then 65.65 is the full ADR. It's this number up here. From where we opened last night, if we move 58 points or almost 1% in a single direction, that would get us to the yellow line. But if we split the difference between one red line and the next red line, it's that same number, right? Because sometimes the market just goes sideways and splits that ADR in half. Or we get bearish and we go to the other yellow line down here. The base case argument for today is that we're not going to do anything until we get the data for tomorrow. So unless these job numbers really shock and awe, it should be another day like yesterday. So if you liked yesterday's trading, well, cheers. You might have another shot at doing the same kind of trading today. Today's floor pivot is higher than yesterday's. That's bullish. Price opened above it, and that's also bullish. So far today, we haven't hit it, and that makes it an MDP, missed daily pivot. The problem is it won't count until tomorrow. If we can make it through the whole day without hitting it, then we'll look back and say, hey, we got a missed daily pivot because we never hit that pivot today. But until the day ends, we don't know that it's a missed daily pivot. We could hit it at any time. We tested the channel and that held, but that's not really our issue. The issue is that markets want that pivot point. They hit it most of the time. Statistically, you're more likely to hit the pivot than miss the pivot, which is why it matters when we don't hit it, right? So the argument is we're very likely going to go down and hit that. And that doesn't make us bearish just because we're expecting to, drop down 13 points and tag that floor pivot. That wouldn't make us bearish. That's just market dynamics, right? Like watching the waves on the ocean. Some are a little bigger, some are a little smaller, but they're just waves that are coming in. It's just the way it is. Because of yesterday's narrow range, the S&R lines today are going to be really compressed. This matters in the context of that trading strategy that talks about R1, S2. Well, we've already made R1. And that does put S2 on the table. And that's 64.64 down here. That still doesn't get us outside of Friday's low, but it does get us back below Friday's midpoint, which is a really key level. We've been holding above Friday's midpoint. And the argument is, well, we kind of need to keep it because if we give it up, we're likely going to test Friday's low and then get a measured move breakdown below that low, and it could get pretty ugly. But we got our R1. And at this point, we've got a very simple question on dynamics. Which one's going to happen? Either we break our Globex low and we check those lower levels, or we break that Globex high, which is also the R1, and we get above R1 and we go for R2. Because, we can do that. Just because we made it to R1 and backed off doesn't mean we have to go lower. We can back off and then make another run at it and try it again. It's less likely though, because we got lower than this low, right? We started setting lower lows and now we're expecting to set a lower high. So far, the range continues. We're just stacking these points of control from the previous week. It's interesting to note where the new point of control is. We don't have one that high, and we don't have any other distribution looking back at that area. We got a higher distribution here at 65.17 area, and a little higher than that 65.25 area. But it's likely that we retest last week's point of control and build that area out, that 64.80 again. So far this week, though, we've got a really narrow distribution, which makes sense because we haven't done anything, right? Waiting on data. 10-day, 30-minute volume profile and TPO. We are working on the candles that built this point of control. We're going to be taking those out through the day today and over the next 2 days. But it isn't going to change the shape of this profile anytime soon. And when it does, at this point, it looks like it's just going to temporarily move up into this 6,500. But we don't expect that to hold because those candles are going to get hit by Thursday and Friday. And then what? Right? And that's really where we're at, is where the heck are we going next? This is a tight range, a tight zone, and a really narrow, very narrow range, this value area here. We are still above the point of control. And as long as we're in this zone, we're going to expect to just continue to do what we're doing. It should act a bit like support or resistance. We should be able to move back and forth through it easily like a magnet. And it doesn't even owe us any reciprocation at this point. So we got nothing here. The only other thing that stands out is the lack of sellers across that high and a lack of buyers along that low. All right, we got another VPOC from yesterday. Just stack them up. So if we make a break to the downside, 6502, which isn't a surprise, it's a front run on 6500, 6480, 6447, which is on the other side of the 6450, and then the cog line 6411. Nice distribution, but no tells. And we're still right where we were yesterday, which makes sense because we haven't moved, right? The 10's getting a little closer to us. Other than that, we're just holding the line. Nothing has changed here. It's still healthy. We're not overbought. We're not oversold. It doesn't owe us a move. The Mag 7 down volume is down. That's a positive. And bonds are down. Looking at what's up. Chips, China, Mag 7 up volume, precious metals, China again, nat gas, and China again, and a little bit of China. Now, Bitcoin's up. It's just not up enough. It's right there. It's really close. We got some quantum moving around in the pre-market as well. It's moving in the right direction. It's just not there, right? So I do this stream at 7:30. If you're running this again later in the morning, say 8:45, 9 o'clock, right before the market opens, you're going to want to change that benchmark to something like 1% or 1.5%. I just use a half because we're so far away from the open, right? We're 2 hours away. So a 0.5% works. But you want to adapt that number as you go, right? Closer to the open, you want to see a bigger change on the things that are up or on the things that are down in the pre-market. So we got things moving in the right direction that could really help out, like chips and Bitcoin, but they're not enough. We need more, right? We can't have them lollygagging down there in the 20s. We need them at 0.5% or better. Just to woo it. That's funny. Pot stocks are leading this morning. The two ETFs that I have on my list that are at the top are both pot stocks. And then nat gas, China, gold miners, China again, crude, Bitcoin, chips, China again. So we've got a couple of the components that we need, right? If we're going to get a rally day, we want to see the Mag 7, chips, cloud computing, financials, Bitcoin. So we've got a couple of the components, but they're not enough yet. Look for 0-day flows to come in and look for those Mag 7 components to really begin a push if we're looking for a topside breakout. Otherwise, look for them to go from green to red, G2R, and then we have a downside break. If we don't get help from something, then it's likely we're going to spend another day doing what we did yesterday, which is just holding the line and going sideways. So make no mistake about it, we got to get out of the box, right? Always, GTFO, get out of that box. And if it's a topside break, we're clear, we're done. If it's not a topside break, then we've got to work our way through all of this material down here, right? Yesterday's RTH, and then all of yesterday's low, and then a breakdown into Friday's low, and then working our way down through last week's levels. Level by level by level, all the way down. It's a pretty simple concept, and once you get used to it, it works really well. All right? So what I got for you guys, be careful, be safe, keep your eye on the headlines,